Well, hello there, guys and gals of YouTube world. Hopefully you're doing well on this Thursday, November the 18th in the year 2021. I'm going to talk about something that the more I think on it, I think it's extremely important for everyone. So before I get started though, real quick, please subscribe to my channel. Please click the thumbs up if you like the videos. Please feel free to comment if you agree with me or disagree or just have something to say. And please feel free to share the video to anyone you want who you think may benefit. But I've talked to a lot of people over the years. I'm 54 years old, so I've talked to a lot of people. There are people who tell me they absolutely refuse to invest. They don't want to talk about it. People in their 20s, 30s, 40s, and 50s have told me that in the past couple of years. Okay, I have talked to people that tell me they want to, but they don't have time. They don't have money. I have talked to people that said they're too young. They're only 19. They're 21. They're 23. I've talked to people that say when their kids start back to school in the fall, they'll get started. And so on and so on and so on. The point is, so many people make excuses, okay? We all have 24 hours a day. We all have 7 days a week, 365 days a year. We all work jobs. We all have different lifestyles. We all make different paychecks, okay? But we've all heard the same thing from the masses over the years. I've heard it. I pay attention to financial stuff, so I've heard it for my lifetime, is you got to invest in the stock market. Put your money in your 401k, 457 plan, 403b, whatever it might be. Put your money in there, you save, and you can see charts. You can see stuff on CNBC. There's something I just saw on CNBC yesterday, I think, talking about, how much to save to get X number of dollars by the time you're 65. 40 years. They're assuming you're 25 when you start, 40 years. And a lot of times the numbers are like $1 million, $1.2 million. That's what you amass over 40 years of investing. That's better than nothing, okay? But try to understand, if you have $1 million, the safe withdrawal rate has always been around 4%, but it's more like 3.5, okay? We'll just say it's 4%. If you have $1 million, the figure they say you can safely withdraw without fear of running out of money, because you don't want to run out of money, is $40,000 a year. If the rate was 3%, that drops to $30,000 a year. So if it's 3.5, you're at $35,000 a year. Okay, so if you have a goal of $1 million and you struggle to get that over 40 years, and all you're getting is $40,000, can you live on that? Can you live on that? Okay, here's the simple alternative. Okay, buy rental property. All those folks I listed who gave a variety of excuses, I guarantee, in Mazke's humble opinion, that if they really want to, they can get on the property ladder. Even folks who have no money, if they're young. Yes, you can't be too young. You have to have some job history. You got to have some money coming in, something. But you can, as an example, say you're 20 years old, you're 21 years old, you're living with mom and dad, you want to rent a place. Can you get a little bit in savings? Just a little bit? And can you buy a duplex, a triplex, or a quadplex? The reason I say a duplex, triplex, or quadplex is you can get a normal 30-year mortgage on it, residential mortgage, okay? Which means if you go to your local credit union or some local bank, you can get the best rates. You can get it first-time home buyers. You might be able to put 3.5% down, 5% down. Let's say it's 5%, and we'll do easy math. $100,000 house, that's $5,000. So if it's $200,000 duplex, triplex, that's $10,000 down because you're living in it, okay? You have to pay PMI because it's less than 20%, but you're living in it. So you could buy a duplex, triplex, or quadplex. Just say it's $200,000 to $300,000, and you're putting $10,000 to $15,000 down. The majority of folks, if they really want to, can save up $10,000 to $15,000. Even if you're living with mom and dad and you're working 40 hours a week at almost any job, minimize your expenses, get the savings, save that money up, because the magic that'll happen is this. You take that down payment, that $10,000 to $15,000, first time home, there's always different mortgages out there. You buy that duplex, triplex, quadplex, whatever it is. You put that down payment into it. You move into it. You're living in one unit, and your tenant, if you have a duplex, tenants, if you have a triplex, quadplex, are paying you rent. That rent then pays your mortgage for you, which means you don't have to pay the mortgage out of your own pocket, which also means whatever that rent is, say it's $900, you're not paying $900, but your mortgage is getting paid for you. And you're also getting extra money for any repairs or expenses. And all you got to do is live there for a year, more or less. I was going to say más o menos. I speak a little bit of Spanish. More or less a year. And you can then leave, if you want to, buy another property, same thing, duplex, triplex, quadplex, get the same kind of loan, put 5% down, move into it. Now you're getting an extra unit's rent from your first property and you're living in your second one. And you've only put each time, let's just say 10 to 15, it will go up to $20,000 because different parts of the country have different prices. So for a little bit of money, you may now have 4 units, 6 units, 8 units, or some combination, 4 to 8, somewhere in there, okay? But then here's the beauty of it. Say you only buy single family homes. Say you want to go a different route, and I apologize if I'm speaking fast. You buy a single family home, you stay there a year or two. Maybe you stay there 2 years. Then you don't pay capital gains taxes if the prices go up. You buy another single family house, keep the first one, you rent it out. Or let's just say you work a job where you make enough of a paycheck, you buy a single family home, put 20% down. You buy it in a year or 2 or 3, you buy a second single family home, put 20% down. And you buy 3 or 4 single family homes over a period of 5 to 10 years. And that's all you buy. And you keep working. Or say you're the gal who bought the duplex, triplex, quadplex, and you stopped. You didn't buy any more. What'll happen is this is the magic. Okay, magic. Your tenants keep paying you rent. Your tenants keep paying your mortgage. It's equity pay down. Every single month that you pay that mortgage with the money coming in from your tenants, you pay the mortgage down. Okay, if you get a 30-year mortgage, it'll take you 30 years. 30 years, trust me, will pass. As you pay it down, you're also getting, over time, your rents will go up. So maybe if you follow my advice and you get, say, roughly, we'll say más o menos, $250 a month positive cash flow. Over time, that $250 will change to $275, $300, $325, $350. Okay, so it's like as inflation goes up, your rents go up. All right, so you're getting more money coming in. But here's more magic. Let's say it takes 30 years. You started when you're 25, so now you're 55. You're not 65. And if you're 65, remember you had to save that $1 million up to get that potential $40,000 a year. But now you're 55 and you pay your houses off. And depends on exactly what you bought. Okay, so 4 single family homes, 8 units, 10 units, 12 units, but you pay them off. Now your positive cash flow goes up by quite a bit because now you're no longer paying principal and interest. Whatever your mortgage payment is, not counting taxes and insurance. So I looked at some of my mortgages. Some of my houses, if I pay them off, I might get $200 extra, okay, because it's a low mortgage. Others, I might get $500 a month extra. Okay, so let's just say the range for me is between $200 a month extra to $500 a month extra. If I'm already doing well living off rent, then I pay them off. I'm 55 years old. I want to retire. I have an extra, my rent money's coming in. Maybe, I'm just making up numbers. Maybe it's $50,000 a year positive cash flow. But now, boom, 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 boom. I start paying some properties off, and my $50,000 a year positive cash flow might change to $100,000, $125,000, $150,000. Okay, I could write it down on paper, or I could put a graph up if I want to get fancy dancy and show you how this works. But all you got to do is think about it. Use your mind. Okay, 30-year mortgage. Over 30 years, your tenants will pay your mortgage off. You don't pay it off from your pocket. It's not like you're living in your primary residence and you're paying out of your pocket. Your tenants pay it off for you. Rents go up over time. And then the magic happens. It's magic, but it's not magic. I think Albert Einstein talked about the power of compound interest. It's compounding exponentially. And this is just the tip of the iceberg, because most people won't just buy 4 and stop. They'll keep going. And then they'll do stuff along the way, like they'll do cashback refinances. They've paid down some equity and the price has gone up on their house, so they'll pull some out to buy another property. Or maybe they'll decide one of their properties is not the greatest. They don't want to keep it for whatever reason. So they sell it, they make a profit, they roll it in to another property by doing a 1031 exchange. They don't pay taxes on the gain. And over time, their income just exponentially grows. It's the magic of real estate. All right, I've teased you about stocks and crypto, and I've talked about real estate, I've talked about oil, I've talked about mineral rights. Real estate is the best way to build your wealth. Okay, I will say that again. Real estate is the best way to build your wealth. Now, as you build it, you can branch out and do other stuff. You can diversify, but you can branch out into oil and mineral rights, and perhaps they will do better for me than my real estate does, but perhaps they won't. But real estate is a given. We all need a place to live. Okay? All right, enough's enough. Get on the property ladder. Mazske is signing out.